US consumer sentiment has registered its lowest point in history. Its last three readings were below the 50 level: April 49.8, May 44.8, and June 49.5. And since the 1950s, consumer sentiment has stayed generally above 80 level around 45% of the time, and above 100 level around another 45% of the time. And how about the remaining 10% of the time? And we can see that whenever it spiked below 80 level, we can see that there were various economic crises. And whereas today is well below 70 level. So what does this means? I will share how I am managing these emerging risks and how to determine whether a deeper correction in the US stock market is approaching. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. The University of Michigan Consumer Sentiment Index is a monthly gauge of how optimistic or pessimistic US consumer feels about the economy, personal finance, and spending plan. When it is at a low level, especially below 70, this means that the consumer are not confident about the current and future economy. That's where they are worried about their income may be affected in the near future. And when that happens, they will hold back on their spending. One of the ways to drive economy is for consumer to spend, and it should feed back into the economy. However, when consumer confidence is low and choose to tighten their belt and spend lesser, businesses make lesser sales, and that will impact their P&L. And one thing to take note is this: a very low reading does not guarantee an immediate recession, as this data does not measure the actual spending by itself. Therefore, it is called a sentiment signal. So the cleanest reading comes from pairing with other data like retail sales, employment, wage growth, inflation expectation, and many others. So how am I managing this divergence between such a poor data and yet a bullish stock market? I will invest very cautiously, and I will have to be quick to act when the tide start to change. And let me just demonstrate with this example. Yes, we should not go against the trend, which currently is a bull market, or the momentum that is going strong. But with such a divergence between data and the market, we should have a pit stop whenever the market signal us with unusual behavior. And during the first week of June, so this is the tutorial. So the title was Upcoming Correction, Shallow or Deep. Of course, we acknowledge that the market is a bull market, but from time to time for this particular week, at the closing of the 7th of June, we saw that across S&P, NASDAQ, Dow Jones, and Russell, there were inverted signal at the close of the week. So I'm taking a pit stop that to re-examine about the market. Another pit stop example will be like right now. And what I'm seeing here for the NASDAQ on this daily chart, I'm seeing a divergence between the prices and its indicator. Then I will have to take a pit stop. Where is it heading? And could it be market may ultimately break below like this and start to come down? So I will have to take a pit stop and re-examine the whole situation. And it's not just on the NASDAQ, and let's look at the S&P as well. S&P. And we could see that for the S&P, there is this divergence as well. So for traders, how do I get into the precision of things? Let me just get into the NASDAQ again. So we discover about, as of now, I may choose not to do anything. So what I'm waiting for is is in between a risk and a continuous momentum. So what I intend to do is that I'm waiting for a break. So basically, when we saw a divergence, it just signaled us that the market is at uh, crossing point right now. So if in the next few days the market is going to break heavy on the downside, my plan is to start to hedge or sell into strength. But however, if the market the next few days is going to break on the top side, the all-time high, and I believe that the momentum should continue. And another example between the month of May and June, just this 2 months, and I'm going to compare it with the one of the largest market cap stock in United States or Nasdaq. It has corrected almost nearing 20%. So this is another pit stop opportunity and for us to take stock on our strategy on this bull run. If you find what I just shared is useful, please like it and save the link for future reference, and also share this link with your friends. My name is Kon Hao. I enjoy studying how different markets currently behave to uncover emerging trends, the potential trending markets of tomorrow. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.